Well, good morning. I'm Jaginder Rana. The topic for the discussion today is insurance regulatory developments. Insurance regulatory developments. See, IRDAI retains obligatory cession at 4% for financial year 2026. The Regulatory and Development Authority has retained the obligatory cession to be placed with the state-owned General Insurance Corporation of India, that is known as GICRE, at 4% for financial year 2026, marking the third financial year in a row at this level. Obligatory cession is the portion of business that Indian non-life insurers must mandatorily reinsure with GICRE. The percentage cession of the sum insured on each general insurance policy to be reinsured with the Indian reinsurers shall be 4% in respect of insurance attaching during the financial year beginning from April 1st to March 31st, 2026, except the terrorism premium and premium ceded to nuclear pool wherein it would be made nil. The RDI said and there will be no limit on sum insured applicable for the cession made during financial year 2026. Financial Ministry seeks applications for RDI chief. The Ministry of Finance has invited applications for the post of chairperson in the RDI as the tenure of the current chairperson, Mr. Devashish Panda, ended on March 30. So in its advertisement, the Department of Financial Services has sought applications from individuals with knowledge of experience in life insurance, general insurance, actuarial science, finance, economics, law, accountancy, administration, or any other discipline which was in the opinion of the central government be useful to the authority. It calls for applications to have a minimum 30 years of relevant work experience and must have worked as secretary to the Government of India or in an equivalent position with the government with proven track record of leadership and authority in decision making. Applications from the private sector are expected to have worked as CEO or an equivalent position in a large financial institution. But the applicant's age should not be more than 63 years old as on the date of vacancy, March 14, 2025. The last day for submitting application is April 6, 2025. Panda's tenure commenced on 14th March 2022. Mr. Panda is 1987 batch IAS officer of the Uttar Pradesh cadre. Before becoming IRDI chairman, he also served as the Financial Services Secretary and Additional Secretary, taking after insurance and financial inclusions. IRDI decision to allow insurers to hedge risk through equity derivatives will help them manage market volatility and protect policyholders' return. However, this move is unlikely to alter their investment strategies. Under the current regulatory framework, RDI allows insurers to deal in rupees interest rate derivatives in the form of forward rate agreements, that is called FRAs, interest rate swaps and exchange traded interest rate futures. So besides fixed income derivatives, insurers are also permitted to deal in credit default swaps as protection to buyers. So looking at the increasing trend in investments in the equity market by insurers, owing to volatility in equity prices, IRDI felt the need to permit insurers to hedge through equity derivatives. Life insurers typically invest nearly 30 to 35% of their portfolio in the equity market and the remaining in the fixed income segment, according to Chief Investment Officer Bharti AXA Life Insurance. This move by IRDI is particularly significant for life insurers since they have a higher equity allocation compared to their general insurance counterparts. IRDI permitted insurers to use equity derivatives to hedge their portfolios, a move aimed at reducing risk in a volatile capital market. So IRDI is working towards implementing major regulatory changes over 25 months. Multiple industry sources said, pointing to the regulator's goal of boosting risk management and putting in place framework of best global practices. Among the proposed changes are the adoption of a risk-based framework and Indian accounting standards, that is INT S11 Risk-Based Supervisory Framework RBSF. While global markets have taken up to 5 years to implement frameworks, RDI is looking for a faster rollout, taking lessons global markets while ensuring the industry has limit to adjust. The regulator is asking for industry feedback before implementing the measures. While global markets have taken up to 5 years to implement similar frameworks, RDI is looking for a faster rollout, taking lessons from the global markets while ensuring the industry has time to adjust. The regulator is asking for industry feedback before implementing the measures. RDI began the transition to RBC in 2023 by launching its first quantitative impact study. It's not preparing for second study which will help refine the framework. Bima Vistar, the DAX cleared for the first ever all-in-one insurance plan. DAX have been cleared for the rollout of the much-awaited Bima Vistar, the first ever composite insurance products covering death, personal accident, property and surgical hospitalization at an affordable premium. IRDI and industry captains have arrived at an agreement on the final model of the product, which is to be rolled out probably from April 2025. According to the insurance regulator, a compliant, simple, comprehensive and customer-friendly model has now been signed off by the top brass of the industry in dialogue with the industry and the Bima Sugam team a couple of days ago. So in all, in one insurance plan, Bima Vistar is one of the key components of the ambitious project of the RDA, popularly labeled as the Bima Trinity, comprising Bima Sugam, Bima Bahak and Bima Vistar. So the project operating mechanism with the necessary technology platform has also been upgraded to facilitate advanced digital management of the product. So in line with the vision of IRDAI to achieve insurance for all by 2047, The pricing has also been discussed, which is yet to be announced by the regulator in the final rollout of the product. While nothing can be said now, a broad range could be between rupees 1500 to 2000 per individual for a sum assured of rupees 2 lakh. So these are the developments taking place on the horizon of the general insurance or life insurance by the insurance regulator. Recently, nearly 3 out of 5 people in India succumb following cancer diagnosis, as per the Indian Council of Medical Research has claimed. So the Apex Health Research Agency claim is based on an analysis of the estimates of incidence and mortality of cancer from Globecon 2022, an online database that provides cancer statistics for 185 countries. Health insurance premium costs have surged, forcing some policyholders to either downgrade or drop out of their cover. 1 in 10 policyholders have missed out on renewals in this financial year. About 10% policyholders have seen their renewal cost rise by 30% or more this year. Only half of them paid the full premium. So why are premiums soaring? Insurers say a worsening claims ratio. The percentage of claims to total premium collected is behind the hikes. The reason why a section of the policyholders see sharp hike is that health premiums do not rise in a steady, predictable manner, but tend to jump at intervals. So insurers typically adjust their rate schedules every 3 years to account for medical inflation. The rising cost of treatments and premium also increases with age, with sharper hikes in later years, reflecting higher claims in older age group. Over the last 10 years, the compound annual growth rate in premiums has ranged between 5 to 10% for 52% of policyholders. This means that for more than half of them, a rupees 100 premium increased to rupees 162 to 259 after 10 years. Health insurance premium growth has slowed significantly after touching record highs during the COVID-19 pandemic due to tapering demand from retail consumers amid affordability issues. According to General Insurance Council data, health insurance premiums grew by 10.44% year on year in the April to January period of FY25 in comparison with 20.79% in the year ago period. It was around 23.57% in FY23 and 25.89% in FY22. So a sharp decline in premiums from the government-backed schemes and the changes in accounting norms mandated by the regulator effective October last year have also weighed heavily on premium growth in the health segment. There is a tapering of demand for retail health insurance as people have been buying significantly in the last 2 to 3 years after COVID-19. Now we assume that somewhere the growth will normalize due to affordability and impact of macroeconomic situation. On the corporate side, the health insurance rates are poor. So the growth in health insurance will depend on new ideas, new products, innovations. According to private sector insurance executives, the spike in demand for health insurance, which has seen post-COVID-19, has started to decline. Star Health on IRDA radar for health insurance claim settlement practices. Insurance watchdog IRDA has discovered serious lapses in the claim settlement practices of standalone health insurance, Star Health and Allied Insurance, according to the CNBC TV 18. While the officials investigate investigations are yet to conclude, the regulator is likely to take action against the insurer. Apart from Star Health, IRDA has also scrutinized 8 to 10 other general and health insurers in the country. However, no word of any action being taken against them has been reported. According to the report, IRDA examined various claims-related aspects such as the number of claims repudiated and accepted, directions, queries raised by policyholders, etc. As per an official statement by Star Health, they have not received any communication from IRDA on this matter. So we wish to reassure all of our stakeholders that at Star Health Insurance, we are committed to a customer-centric approach, ensuring that our processes and practices align with the best interest of our policyholders. IRDA conducted regular audits and thematic inspections as part of its regulatory oversight in line with the framework outlined in its master circulars. These assessments are a routine process to ensure compliance across the industry. The media statement appeared to be speculative and motivated in nature, and we have not received any communication on this subject from the regulator. As per IRDAI's Handbook of Insurance Statistics, Star Health's incurred claim ratio, that is the quantum of premiums any insurance company pays out as claims with the total premiums it has collected in a year, for the year 23-24 stood at 66.47%. In essence, this means that for every rupees 100 the Star Health collected as premiums is only pays approximately rupees 67 towards honoring policyholders' claim between 23 and 24. Thank you. Thank you very much.